Welcome back to Global TA. Today we're actually going to be applying a lot of the things we've been talking about throughout this course. Again, Global TA is specifically focused on helping you be able to earn money in trade and capital markets, understanding just basics of technical analysis, and then also some more advanced things. And up until this point, it's been a lot of fundamentals, looking at things on the charts, and we've been spending a lot of time on TradingView, which is my personal trading tool of choice when it comes to just charting things out using different indicators. But obviously you can't actually trade on TradingView, right? So TradingView is one tool in the tool belt. Basically what I do is I map things out here. You can see this is just today is June 20th of 2021, just for anyone watching this in the future. So Bitcoin has kind of saw this little breakout. Remember this symmetrical triangle. This is something we talk about in the I think module 3 in this course, and module 4 was more on advanced indicators. The previous module 5 was on how to spot opportunities in the market using volume and open interest. And once you use all these things, you're like, great, I have all these skills. I recommended at the beginning of this course in the kind of frameworks and paradigms to start out with paper trading, right? So that way you can back test your strategies, putting these tools together, being more confident in the market. And then once you can see this work on paper, once you're kind of practicing doing this, then you can actually go to the exchange and do it. But that's why in the very beginning, I didn't necessarily record a video on how to use exchanges, right? Because I wanted you to build these skills first. Then, if you're interested in going on an exchange with a very, very small amount of capital at first, obviously it's all proportionate to your portfolio, right? So if you're trading with over 7 figures, $1,000 to play with is nothing really. But if you only have, let's say, if you just have $10,000 invested, then maybe you just want to play around with $100, right? So this is something that's very, very important to understand. Again, is you're using TradingView as kind of the overview, right? So understanding, okay, what's going on in whatever individual asset class is. The whole point of this course is not just to have you trade in crypto, not just to have you trade in Forex, not just to have you trade stocks, but also things like commodities, any really investment sector. Learning the fundamentals of technical analysis is very, very important. And once you're able to understand these things, then you can go out and actually utilize capital markets, right? You can kind of be where the money is, be where the flow of money is. That's very, very important. Gregory Mannarino has a great book called it's like a not so random walk down Wall Street, and it's really good. It's just like an ebook you can get. And growing up, I read a ton of the fundamental investing books, and a random walk down Wall Street is kind of one of these that it's like everybody reads, right? But Gregory's view on the market is absolutely incredible, especially he's really focused on trading options. But yeah, so the point here is, again, to map things out here on TradingView, and then you can go over to the exchanges. So we're going to be breaking down, okay, what's going on here with ByBit and Femex. These are two that I like. I also will be probably putting out a separate video in this Global TA playlist, which, by the way, save the playlist. You can go back and you can refer to all the modules. Moving forward in time, I'll probably be updating some of them. So throughout any parts of the course, if you have any questions, let me know in the comments down below. Also, you can join our Telegram group, which is linked down below in the description, or just tweet me at investglobal_io. That's also down below in the description. But the point here is to go, okay, you don't want to have this seem too scary, because once you understand exchanges, it becomes very, very simple, right? So basically what you see is exactly what you see here on TradingView, right? So they actually help you chart here, but I personally like using TradingView as a charting tool and then going over to the exchange. So kind of having these two, ideally you have maybe your phone and a laptop, or maybe two laptops, or maybe a tablet and a laptop, right? That's kind of, if I'm trading that day, that's what I like to do. So you can really do these things quickly instead of having to switch, right? So like switching back and forth. Or, if you only have one thing, what you can do is just do split screens. You can, you use a window, half of your screen, the window in the other half. Still, it's ideal to have two different devices. So like I was saying here on ByBit, it's literally basically the exact same, right? So you can see the chart right here is just the exact same on the 1 hour time frame. Right now, let's go to the 1 hour, flip it over here. You can just exact same thing, right? So you're using this is volume right here. You can add and subtract different indicators right here. So let's say we want to add our Bollinger Bands, just to make sure things are the exact same. And some of these little differences can be very, very important when you're trading. So that's why it's important to confirm what trend you see. So let's just take, for example, right now. So by the way, this played out exactly as I was hoping, right? So I made this nice little short position out of this kind of we did a bit of a fake out, right? So it was a pretty crazy high parabola. Then we started consolidating, and now we've just been really consolidating down. But in this case, what we are in is a descending wedge, right? So we're in this descending wedge right here. So technically this is a bullish pattern. Boom. And we're meeting up with this key level of support down here, this box that I've drawn out. along with we fell back into this pattern, right? So we fell back into this symmetrical triangle. If we break down, I mean, the downside is quite high right here, but this is just an example, right? So you identify this trend and you go, okay, let's say you just want to do a small leverage position. You think that maybe we'll bounce off of these, right? Maybe you pull out the EMA and you go, okay, wait a second, we're a bit overextended. We fell way below all these moving averages. We kind of busted down right here, and this is not a good sign, right? So potentially we could go even further, or we could have a little bit of a bounce here. So this is potentially where you'd go, okay, just completely, for example, let's say we wanted to do a long position here, and I'm going to apply this to the exchange. Give me a second. And we set our stop loss. Let's just say we're doing like a 5x leverage. We only want to risk 10%, and we think it might come back here to the top of the triangle, right? So in this case, what? So we would have 5x, so right around 30% potential gain and 10% potential loss there. So if we're using 5x leverage. Now, this is where it gets really important that you draw this out on TradingView, and why we don't just do it on ByBit is because you cannot do this. This is massive. Drawing these things out, you cannot do this in a ByBit. Some exchanges allow you to do this, but it's a bit more challenging here in ByBit because you can't draw these things out. What you can do is set up your position here, and this is where either using ByBit, either using Femex, either using Binance, all these things, the basics of them are quite similar. So they have a lot of congruence. And once you identify, okay, so maybe like right here is where we'd want to have that entry position, you would have it here on the BTC chart. And one thing I do want to say is depending on what exchange you're using, it's very important. Right now I'm just using the Bitstamp chart because this has the longest history, and that's why I like to trade things macro on Bitcoin. But once you identify this, then you want to go to the exact exchange, right? So now that we've identified this on ByBit, whatever your pair is, so whether you like BTC, USDT, whether you like the Coinbase chart, whether you like whatever it is, it doesn't matter. So now that we have identified this position, now we want to go to the actual specific ByBit chart. Because remember, all of these, basically what TradingView is it just has an oracle taking all of the data feeds. So all of this, the order book, right? So these are all the prices in the market, the buys and sells, right? So this is, I was talking about open interest and volume in the previous video. For this individual exchange, you have just the volume here, and open interest. But if you're on just BTC USDT on Bitstamp, it's basically combining all of these together. So again, what you want to do is go, okay, I'm going to trade here on ByBit. So I want to be on the exact chart, because any small differences, especially if you're just doing quick trading, can make a big difference, right? So we want to go here. So BTC USD, let's say we want to do USDT here. So yeah, inverse. How about this? USDT perpetual. Let's pop over there for a second. Okay, this is typically what I would do. So BTC USDT perpetual, that way you can trade on leverage. So I would want to go here, and I would go BTC USDT, and right here you can see ByBit. So this is the perpetual future contract. Boom, we pop that in. Now we can see, okay, basically the same chart, but tiny price differences. Again, these make a big thing, and you could just use Bitstamp, but I recommend, just for the practice of doing it, apply this methodology where you go, okay, I'm trading on ByBit or I'm trading on Femex. I want to have the exact chart up here so I can track it, and then right away, on my other device, ideally, like you're here on TradingView, you can see exactly what's happening. Maybe you identify the trend in the 1 hour, and then you go, okay, let's go over here to the 5 minutes. And okay, we're overextended on the Bollinger Bands. Like, okay, if we see a bullish engulfing candle, maybe that would be my entry position, right? So we're on the bottom side of the Bollinger Bands. We're overextended on all these EMAs. We've broken down. If we potentially see a bullish engulfing candle, that might be a good entry position, right? Because you identified the trend on the 1 hour. Then you look for the entry position on the 5 minute, which, again, we'll be talking about combining all these tools that you've learned throughout this course in the next 2 episodes. I'll probably the next one will be called Putting It All Together. And I'm putting these all together, combining these things, back testing, really building your own personal trading strategy, and not just listening to other people. Because, again, the whole point of this series is to take this as a kind of lifelong lesson, right? So you can apply this no matter what. You don't want to be reliant on someone else's trading indicators or calls. That's why I never recommend paying for anyone's you can use it as like a data input, but I don't recommend actually paying for someone's and then trading off it, because there's always a bias of everybody else paying for that. Like if this person says, hey, I know that I'm the secret master of the charts, I know all these different things, everybody else paying for those things is going to do the same trades you're doing. I want to do the trades that only I am doing, right? That's kind of the whole point, is finding your own ideas and crafting your own trading strategy, and then back testing it. And that way you're going to be able to become more confident with it. And then, hey, if it doesn't work, then you can just apply the exact same things we talked about in this course, form a new trading strategy, back test it, then actual test it in the capital markets. So right here, again, we talked about, okay, so that might be my entry position. So let's just say, just for example, we want to do a long position here. I'll show you how to set it up on ByBit. So we set this up, right? So we have our stop loss right here, 0.5%, here 6% gain. Now, what would you actually do? So this gray number on the chart, so when you click this gray number is your entry position, okay? So that would be the number you put in, and I always recommend doing a limit order, okay? Market order, and let me just go here to the exchange and I'll show you. A market order right here basically is the exact up to the second number. So if you place a market order, boom, it's going to enter you into a position right where you see how this number is constantly changing. All these order flows are constantly coming in. It's going to enter you exactly in right here. So some people panic in. I never like to do this. I always like to trade from a position of strength. So that's why limit orders are so important. Conditional orders, I might do like a bonus video on this course series for. Again, if you have any questions on conditional orders, they're good to use, but some exchanges like Femex, for example, you try and use a conditional order and you have to get premium. So I know that not everyone uses premium orders. It's good to just start out with limit and market orders, honestly. Basically, conditional orders allow you to trigger when certain events happen. That's why it's conditional, right? So when certain market conditions apply, then it will enter you in a position automatically. With limit orders, basically, once it hits a certain number, you're automatically entered in. With market orders, it's exactly where it's at that split second when you hit open long, right, or open short. So I do not recommend market. Now, there's certain trading strategies where people like to use market, but I prefer limit because then, again, you're trading with it from a position of strength, and you can set up your trade here, right? So if it doesn't trigger this point, so let's say this bullish engulfing candle does not hit and it doesn't actually close there, then it won't actually execute. You won't actually be in the position. But if it does hit here, that's where we take that gray number. We put this order in. So we would go here to ByBit. We would go, okay, limit order. We want it to be that exact number that we saw, right? So this gray number, so 33695.5, 33695.5. So we would go here, 33695.5. Boom. So you have that in now. This is where it goes, okay, so you have the number in. Now you need to go, okay, what percentage of your position are you going to put in? So let's just say you have $100 on ByBit or you have $1,000 on ByBit and you only want to trade with 10% of that. Boom, you'd click 10%, right? So, and then it would show you that in BTC terms. Or let's say you have let's just say you have 100, let's say you have 100 USDT in this ByBit account. You'd go here to 100% and you'd be trading with that full thing. You'd click open long. And again, it wouldn't automatically open your position. What it would do is it would open a potential position basically, and that position will sit until that order price hits. Once the order price hits, now you're in the trade. And I always recommend before you set up a trade, so you get the framework now, right? So you took it from TradingView, now you applied it to the exchange. And before you do this, let's say you're going to do a long position, set up a take profit and stop loss. Okay, so that is where you hit this. Okay, so remember, the gray number was our entry position. The red number down here, so this red number, let me just spread it out so you can see it better. So this red number, normally, you can see that's basically the market price, right? So if you hit market order, this is constantly changing, right? So the candle just represents all of the price action within the given time frame. So each of these candles represent the 5-minute time frame. I talk about this in the basics of trading video. It's called like anatomy on the candle, of the candle. In the timestamps, you can find it. But this is the number we want to put in for our stop loss, right? So this is for if it's a long position. If it's a short position, just flip this upside down and inverse it. So this would be your take profit if this was a short position, and that would be your stop loss up there. But anyways, we want to take this exact number at 0.69%. So we would go, okay, 33461. So again, remember with stop losses, these are very, very powerful because essentially what they allow you to do is minimize risk. So let's say, you're trading with that. Let's just say you're trading with that $100 and that's a lot of money for you. Well, you only want to risk, let's say at a given time, 1% of that, or even less than 1% of it, because the whole point of trading is being able to trade another day. If you completely screw yourself and you go all in, you FOMO into one project and you don't set a stop loss, I mean, that can be horrible. So essentially stop losses allow you to just get liquidated out. Now, yes, you do lose a little bit, but at the same time, I mean, let's say you're testing a trading strategy. Nothing ever works 100% of the time. Hopefully you're not using something that works 0% of the time. So somewhere in the middle, so let's say you can win like 6 or 7 out of 10 trades, and you're doing maybe 10 trades over, maybe in a day, maybe you're going really, really focusing on it, and you're doing 10 trades. Well, this is where you want to go, okay, out of those 10 trades, if I'm only risking 1% each time, right? So like, let's say you set the stop loss even tighter, and obviously if you're doing leverage, so 0.25% and you're doing Forex leverage, then you're only risking 1%, right? Your upside is uncapped, right? So either you can just set a stop loss and not a take profit, or I do recommend using a take profit, at least doing a percentage, like pulling 50% profit and then maybe setting a trailing stop loss. But the point here is, before I get too off track, is using this exact number, right? So we have our entry position set. If this pops up, hits, and let's say we see a bullish engulfing candle, that's where we'd want to enter. And again, this is for example purposes. But here, so 33611.5. So we'd pop that in here. So 33. So right, this would be take profit. This would be stop loss. So SL and TP. So now I just forgot it. Hold on, 33611.5. And this is, again, 33611.5. This is why it's very powerful to have two devices that you're using at the same time, and not just being reliant on one device, because then you can look at it right away. You can have these numbers. That's what I always talk about in the beginning of this course, having a trading journal, so you can write these things in if you're paper trading, and then you can go, okay, what did I do right today? What did I do wrong? You can reflect on your trades and go, okay, tomorrow I want to be less emotional, right? Maybe you were too emotional today. Maybe you tried to get into this position when it was clearly not a good one. You didn't follow your trading rules. You didn't follow your trading setup, and tomorrow you want to action the market better. So that's what's important here, and also so you can, like I said, paper trade. But now that we have our stop loss, we would pop in our take profit right here. Okay, so 35. Let's see, 35970. Okay, we pop that in. 35970. Okay, now that we have those set up, then only then do we enter the long position. So you can see how there's a lot of things leading up to this, right? So a lot of it's kind of all the work you do in the background, all the work that goes on behind the scenes. Think about it like making a movie, right? So making a movie, people see it for maybe 2 hours. They see the finished product, but they don't see all the things that went on behind the scenes. All the directors, all the people on staff, providing food to the actors, doing the lighting, the everything, editing, all these different things. This is kind of all the work that you're doing in TradingView. So TradingView is kind of like behind the scenes, right? So TradingView is behind the scenes, and then when you actually want to go to the show, right? You want to trade in the capital market or show the movie to the public. That's when you go to the exchange. So I do not recommend just trading on the exchange based on this like quick price levels, right? I recommend going on TradingView, setting this up. Just maybe when you get a bit more advanced, maybe when you can do trading a little bit longer, you might try and do it on exchanges. But most people that I know who trade, they get destroyed when they do it in this. The best traders that I know use trading tool, use whatever it is. You can use TradingView or whatever your trading tool of choice is for charting, and then they take it to the show, right? Then they show the movie to the public. So now that we have this set up, that's where we would open our long position. Obviously, this is just purely for example. I don't even know. I have multiple accounts on all these different things. FEMX is literally the exact same thing. But here on ByBit, you can see the funding rates. You can see 24-hour turnover. You can see 24-hour low to high. All these different things. You can change whatever pair you're using here. Binance is basically the same thing. I might actually do an individual deep dive tutorial on like how to fund a ByBit account, how to do all. It's really, really simple. There's lots of videos on this, but for this individual module in the Global TA course, I just wanted to show you how to use all the things that we've been talking about and apply it, okay? So there's a couple other things I can show you here. Leverage, so isolated and cross is very, very important. So isolated means whatever leverage you set, so whatever, like let's say you're going to do 100x leverage, right? Like let's say you want to do this. That's all you're going to risk. So you know the exact risk. Let's say you're trading with $100 and you do 100x leverage. You're now trading with $10,000, right? So your potential liquidation is that $100. So if it hits that stop loss, remember if you have a 1% stop loss and you're doing a 100x leverage, this can be very, very bad, right? So that's why I don't recommend doing 100x leverage. I recommend starting out with low leverage, if any, just maybe start out with spots. But then once you understand how to do these things a little bit more, maybe you can go up to 3x. I like to do max, like what I do is like 10 to 25x. But that's, again, if you've been trading for a lot longer and you know what you're doing. So basically, like I said, isolated, that's all it's going to pull from your account. That's all it's going to pull. Whereas cross, it can actually pull more from your accounts. That's why I personally only like using isolated. They break it down here, but some people may be a bit confused, and I can read the way that they have it. But then I kind of just explained it in simple English. Once you use it a little bit more, you understand what I'm talking about. But under isolated margin, a specific amount of margin, so the exact amount, leverage margin, same word, i.e. initial margin, is applied to to a position. And position margin can be adjusted manually. In the event of a liquidation, you may lose the initial margin and extra margin added to this position, okay? So that's all from there, but cross, it can actually pull from other things, right? So this can be a big problem with cross, and some people get wrecked with this. So all available balances of the corresponding margin accounts will be deployed to meet the maintenance margin, right? So it keeps pulling this in from your account, and that's where problems can go. Especially like what I like to do is especially if I set up a trade and I'm not too worried about it. Hey, go for a walk, go outside. Don't spend a lot of time. I don't like to spend a lot of time inside at all. I like to spend the minimum amount of time necessary to use whatever technology, whatever I'm investing things that I'm doing, and then go outside, enjoy nature, enjoy real estate, whatever it is you're doing outside. Here in Batumi, Georgia, you have the beach on the beautiful Black Sea, and you can go enjoy the environment, right, and kind of live stress-free knowing that you have these things set up. And especially if you have it set up and maybe it's your first trades, you're a little bit nervous, hey, take a screenshot of it, right? Take a screenshot of it because the exchange will refund you if you're using a good exchange like ByBit or Femex, and Binance does this as well. Now, some of the customer service is not the best on Binance and Coinbase, but ByBit and Femex are really, really good about it. There's also like Prime XBT. There's a lot of other ones. I have links down below in the description for kind of my favorite exchanges. But basically, what the whole point here is, right, is to have this peace of mind while you're trading. So that's why it's important to basically, you can take a screenshot so okay, this is set up so it'll automatically either stop me out here or take profit here. Also, what I like to do sometimes if you're being a bit more active and you're dedicating, like let's say you're dedicating 3 hours to just trading, you can actually move your stop loss and take profit up once you open that position. So once the position's in, then you can move these things, right? So the main thing, the reason that you want to set it up is, let's say you hit open long and then you get a call from like a family member and it's an emergency, or something happens at wherever you're staying and it's an emergency. Well, you know that at least you have these parameters set up, so your downside is capped, right? Versus if you're trading with $10,000 and you forget to set a stop loss, well, you can actually risk losing all that $10,000. But if you set a stop loss, you can trade that exact same amount of capital 100 times over if you're just using those 1% of stop losses. So I know it's a lot of information, but again, just to recap, cross is basically pulling from it. So I do not recommend cross. There is a time and a place for it if you're a bit more advanced. Isolated is a bit better. They also require a bit different trading strategies, in my opinion. Basically, you set it up here like that. Femex is very, very similar. I can't remember exactly where it's at. Let's go back here to markets. My bad. This is on spot on Femex. So what we would actually want to do is go to perpetuals. So we would want to go to contracts, and we would go to like BTC USD here, and then you can switch your here we go. That's where it is. So I typically, to be honest, with Femex, I've used the mobile version, and I don't use it at all anymore. When I first kind of learned how to trade, I use Femex a little bit, but you can set up your margin right here, and then set your entry and exits, set the actual quantity here, liquidation prices, target prices, all those different things. That's basically setting up a profit and stop loss. Very, very similar to ByBit. It's just getting used to it and kind of playing around. So I recommend before you trade, just go around and click on every button. Be curious. That's one of the things that not just in trading, but just in general in business and investing, whatever it is, be more curious. So instead of just going, hey, I don't know what this is, right? I don't know what close P&L is. Click on it. Understand what it is. Click on this. Okay, what's post only, right? Like go and learn these different things, because then it helps you, right? More tools in the tool belt is a better thing. Again, we talked about these are the different time frames. You can see, you can actually go, you can like star these. You can see them right here if you want to do them quick. You can also add indicators there. Like I said, you can change it to like a line chart or whatever type of chart you prefer. For this course, we're just using candle charts, right? You can, let's see. You can change some things here in settings like colors, and maybe if you like to be a bit more custom, you can do this actually exact same thing here on TradingView. If you go down here to options, you can change the colors. But these are just kind of things that you can use if you want. You don't have to. You can see the order book here. We talked about that. These are kind of the ongoing orders. Again, just to reiterate, the limits in markets. Limit is much better because you're trading from a position of strength. Market is just buying this at this exact price, or essentially entering at that exact price. We talked about take profit and stop loss. Same with short positions. Open, short, open, long. Those are very, very straightforward. Besides that, it's very, very simple. That there's really, really nice tools that each of these exchange has. And especially now with decentralized exchanges getting into the space, the main thing is not being so reliant on just ByBit or just Femex. Is once you understand these things from a fundamental perspective, then you can go, okay, I just learned all these things on ByBit. It basically applies the exact same way on Femex, on Binance, and all these different things. You just need to play around with it and make sure you understand what you're doing. Make sure you know that the responsibility is in your own hands. You can't call up anyone and go, hey, I didn't know that I should have set a stop loss, or I didn't know that if I set a market order, blah, blah, or I didn't know if I did cross margin. This is your responsibility. That's why you have to do your own research. You have to understand these things. That's why I put this course out, is because I don't want people to feel like they have to pay thousands and thousands of dollars for some trading course from a guy that isn't even a good trader. A lot of those people, it's like, okay, if I have to sell you a trading course, why am I not just and I'm so good at it, why am I not just making money from trading, right? Like, that's what I do. I'm never going to sell you a trading course. There are some pieces of information where it's like you can pay for it, right? Like, you can do these things. I don't necessarily knock people who do these like paid courses, but for trading, this is something that I think everyone should know. You see these YouTube ads, you see people that are like, in their 20s that are trying to tell you that they're some trading expert and they have the secret. No. Global TA, start here. If you want to learn a bit more things, maybe I'll do more advanced videos, but that's basically it for this video. We can return back here to the chart. I was going to look at one thing here on the 1 hour and point this out. It's very important to use this, right? So it's very important to set these take profit and stop losses and use this long position like that. You can also match your indicators up. So like, let's say here you have EMA, volume, and Bollinger Bands. You can do the exact same thing here on ByBit, or the exact same thing here on Femex, right? So on Femex, you would go indicators, you would hit Bollinger Bands, pop that in. We want that. We want EMA, so moving average exponential. We want volume, or maybe it already has volume on. But this is like the order book right here. So this is recent trades. These help you to see like volume. So you can see volume down here, and open interest, what we talked about yesterday. So that's basically it for this episode. I know it was probably a long one. I apologize if it was a bit slow, but these are things where it's like, man, you got to learn these things. Very, very important to understand how to trade in capital markets and how to take the ideas you have from TradingView and apply them to whatever exchange it is. So remember, it's not just about ByBit and Femex. These are two kind of popular ones. They have like some sign-up bonuses you can use. I have some of my links down below in the description for my favorite exchanges. But yeah, that's all for this video. Like I said at the beginning, join the Telegram group so you can continue the conversation. Follow us on Twitter at investglobal_IO. We're also going to be doing a live stream later on today. So if you made it this far in this video, stay tuned for the live stream. Yeah, that's basically it. So if you enjoyed the video, like it, add the playlist to your favorites, go through, make sure you're going through the beginning episodes as well. Comment, like, share, subscribe, notification bell, all that good stuff. That's all for this one. If you enjoyed it, again, like, subscribe button, all. Leave me a comment down below. Invest Global, and until next time.